panel from the diverse background. The panelists are veteran from the industry. They are the financial expert. They have worked in. They are working in the PE fund or VC funds, and they have funded many companies. They have seen all kind of companies which are small, mid, or large, and they have evaluated many proposals also, and they have helped a lot also. So each panel we have Mr. Sanjay Ramdarji. Sanjay ji is having vast experience in various sides. So welcome Sanjay ji for joining with us at this today's webinar. And then we have Rajiv Suri ji. Rajiv ji is the managing partner of Rise Venture, which is a VC fund. So welcome Rajiv ji for joining with us in this today's webinar. Then we have Sridhar Sampath ji. Sridhar ji is representing the Impact Fund, which is a very large impact fund, mainly in the very specifically the water and sanitation segment. Welcome Sridhar ji for joining with us. Then we have Samir Mahajan ji. Samir ji is representing the Stride Venture, which is a venture debt fund, which is helping the startups and the MSMEs, the venture debt side. Welcome Samir ji for joining with us. So friends, this is a webinar where we are trying to discuss. We'll discuss on the various aspects of funding in the MSME sector. And as you know, that MSME is the pillar of, I think, the backbone of our country. We have more than 6 crore MSME players in the country. And after this new definition, this, I think, everybody has covered actually, as per some data. Almost 95% of the companies in India, the businesses in India are covered under MSME. So it's a very large number. Where we have this kind of MSMEs. Those are spread across the country. So you go anywhere in the country, in any state, everywhere you'll find out the players. So those are to small size businesses also, and there are mid-sized businesses also. And they have grown and they have become the large giants also. Sometime Reliance was a small company also, and it has become the world, I think, among the largest companies of the world actually. So, so any MSME, any small company can become very large, depend on the kind of the funding available to them, kind of the product which they are running, kind of investments they are getting. So these are the parameters. But the MSMEs are facing the challenges also, which are the operational challenges, technological challenges, the funding challenges. So there are many challenges are facing by them, because you know that initially the company has been started, or company starting with the small money by the founder himself, and then they are growing it. So the founder is the all-rounder actually, the company at the initial stage. So friends, I would like to run through a small PPT which can give you some idea that how these the funds are helping the MSMEs in different ways, and how to approach, where to approach, and what they generally see when they are investing. And so friends, the major thing in the entire ecosystem is that the government has considered the request of the industry, and they have redefined the definition of MSME. So where the micro companies are there and small and medium are there. So companies which are up to 250 crore of turnover and the 50 crore of investments are covered under this MSME. So as I told you that there are more than 6 crore MSMEs, although the registered MSMEs are very less in comparison to the estimated MSMEs in the country. But now the number is increasing because the government has allowed the even traders and retailers to be the part of the MSME also. So if you see that the major number is in the small category, then the micro, and then the medium. So MSME is contributing something around 29% of the GDP, our GDP, and which is increasing year-on-year basis. And the online payments, I think 72% MSMEs are using online payments. And export, 48% of our export actually from MSME only. So it's a big number actually. If you see, roughly 50% of our export is coming from MSME only. So there's a very big potential. We come on the PEBC investments in India. So total, if you see since last 2015, this number is increasing year on year actually. So in 2015, it was only 19 to 20 billion dollar was invested by the PE fund and VC funds, and which has reached to something around 47 or roughly 50 billion dollar investments in in last 5 to 6 years. So this number is increasing. So it shows that the investors are very much keen to invest in the growth story of the companies which are having the right mix of product, and they are looking for growth. So sources of fund, as you know that initially, whenever anybody is starting the company, they are starting from their own funding, then they're raising funding from their friends and relatives, then they are earning some profit, which are deploying in the business only, and then they are taking some loan also. And then comes the private equity or venture capital funding actually. So although this the venture capital funding or private equity funding, the cost is varying depend on the fund to fund or the kind of company, but it helps in the high growth of your organization. So there are majorly three type of investors. So angel investors, those are coming at very early stage, and they are helping you putting up money also and supporting in some way. Then there are venture capital. They are taking high risk when they are putting money, and they are coming at the stage where you got some angel investment, you reach to certain stage, and then getting the venture funding. And private equity funds are coming at the later stage whenever you are looking for growth funding, and their ticket size is little bit bigger than the venture capital funds. These are the instruments through which you can raise funding, equity funding. So the plain equity, ordinary shares, you can raise funding through that, and there are convertible instruments. So these are either in the form of preference shares or debentures, which can be convertible and the partially convertible and all. So these are structured instrument where you have the flexibility of converting them at the right time whenever your business is reaching to a certain stage and all. So these all instruments are using by the funds for funding to the MSMEs or any company. So process of raising of funds. So there is a set process which need to be followed up. Any company, any player, any MSME or any organization is willing to raise funding, they have to have the business plan ready with them. So that is very important that the proper business plan should be ready. Their projections of financial model should be as per the requirement. We should have the details and the bits and pieces so that anybody can understand immediately. And the company which is going for funding, they should know their competition. They should have the industry analysis that who are how big is the market, who are all are the other players in the market, what will be the impact of the government policies, and also these things have to be done in advance whenever you are going for any kind of fundraising with the funds. So, and they should know that what is their USP also, what their unique selling point in the business. Then the next aspect is basically the identification of the right kind of investor. So there are different kind of investors out there which are looking at different kind of sectors, different size of investment, and then there are strategic investors. Those are basically the investors who are looking some kind of strategic investment, and there are financial investors. Those are typically looking the financial returns only. So depend on the company requirement, the company can approach to the investors. Then ticket size also again depend which ticket size of funding you are raising. So investors should be according to that only. Negotiation. So once you have approached the investors liking you and all, then you have to have the valuations discussions, the negotiation. They'll issue some kind of term sheet of sanctions which you have to discuss, negotiate, and there will be many key terms or terms and conditions which need to be studied properly and to negotiate with the investors so that it should be a win-win for both the investors and for you also. Investors and investor who putting money, they are doing a lot of due diligence before putting money. So they are appointing third parties generally who are the well-known agencies. So they are doing the legal due diligence, whether all your contracts are valid or contracts are foolproof, whether the financials are as per the balance sheet or whatever the financials you have prepared, which are having all kind of norms which have the statutory norms or the other requirement have been meet out these financials. And the closure, so after this negotiations and the due diligence, there will be a closure of the deal where the SHA, the shareholder agreement will be signed. So you have to carefully read the shareholder agreement and whatever the clauses are there, because this is a marriage which is not for 1 year or 2 years. It's a long-term marriage which you are having with your investors and you are giving your equity. So you should be very, very careful whenever you are signing the M&A, SHA with the funds. And this should be vetted by the legal counsels also. Then we have to see that what is the requirement of money. So whether the disbursement will be in one tranche or it will be in the multiple tranche, depend on the funding requirement in the business. The money will be disbursed by the funds, and the post disbursement there will be some kind of compliances which need to be done by the investing company. So whenever any fund is evaluating the deal or the investment, they are generally looking for the experience of the promoter and their past successes, past track record. They are looking the market size of the company business, basically how big is that industry, and whatever the projections, the financials of the company will look like in the next 4 to 5 years. Competition, how the competition is growing, or what other players are there in the competition and how they are valued also, and the economic environment, the country situation, the political risk and all they consider when they are investing in the company. So advantage of private equity, definitely whenever you are taking any private equity or venture capital, so it is not a loan actually. So there is no pressure of EMI repayment or there is no collateral requirement actually. Yes, sir. So whenever you are taking loan, you have to prepay on a set time, set EMIs are there, the collateral. So you have to give collateral security, your house or maybe your property, other property, your mortgage with the banks and all. Here this is not required. And in case of any downturn in the business, there is always a risk in the loan side where there may be a challenge in repayment. But in case of equity, these kind of risks are not there. Although the investors will push you hard that you have to grow the business, and then the freedom to invest the money in the business. So that is there also with the private equity. So there are advantages whenever you are taking equity money, and you have a lot of freedom. And investors are not only putting money; they are helping you in many ways. So they are helping in the they have understanding or knowledge of that sector, deep knowledge. So they will, I think, part with this knowledge with you so that your business can grow. They will help you in the tying up with you with the other portfolio companies. So one investor is having investment or maybe 10, 20 companies. So their investing company, other investing company can be partner with you in maybe some of the product they may buy from you, or there may be some good synergies which are there in these organizations can be given to you also. And the connections of the partner, the PBC partner. So suppose you want to go internationally, globally, your fund is having connect with the other players in the other part of the world. They can leverage that network of that relationship, which will help you to grow your business. So fund is basically your partner in your business actually, and then you can reach the another round of funding. So depend on your requirement. So you can go for the larger round of funding. At the so generally that second round of funding or the follow funding comes at the higher valuation. I mean, if you are performing well or whatever the numbers you have given, you have meet out the numbers up to the expectations. So this is a new thing in the country where the government is also very keen to help the MSME sector, and our this finance ministry and MSME ministry has launched this SRI fund, which is 10,000 crore fund, and this fund name is basically Self-Reliant India, which is majorly for MSME sector, and so it's a parent fund where they will invest in the daughter fund. So it's a fund of fund actually, which has been set up by the government of India through NSIC, and they have to this government will give 10,000 crore and to the daughter funds, and the daughter fund have to invest 5x in the MSME sector. So this 10,000 crore will become 50,000 crore if this will be given to the daughter funds, and the daughter fund has to invest this much amount in the MSME sector. So it's a big number actually. If you see 50,000 crore private equity, it is often first time in the country that government has taken this lead, and they have understood the requirement of the MSME sector. And so there will be a lot of investors who will be chasing you. They will be looking to invest in the MSME sector. Road ahead, we see this government of India initiatives, Atmanirbhar Bharat, which is, I think, a very good initiative, mainly for MSME point of view, and which is, I think, helping. And the state government have also taken the lead now. Actually, every state government has come out with a startup fund, which is putting money in the startups and MSMEs in the form of equity. And as you know that there is impact of COVID on the businesses, and majorly the MSMEs have impacted. The supply chain is also impacted. But I think there's one thing which is helping India. The large corporates, the large organizations are avoiding China because of some reason. So India will be the huge beneficiary of it. So this advantage will go to our MSMEs also. So the future is very bright actually, as we have written our the tagline that opportunity for next decade. So there are huge opportunity in the next decade for the MSME, and the technology is the game changer actually. The digital India basically you see. So our MSME players are now taking the help of digital. They are taking the technology, the state of the art technologies, which are helping them to grow fast and to be more transparent in the system, so that they can reach to the larger market, and they can invite investors also to invest in their companies. So friends, this is a small PPT which might have given you some kind of I think idea where how we are basically helping the MSME sector. So I hope that it will give you some kind of understanding. But we have our panel; those are experts. I think they will be in a better position to guide us, to give us the understanding about the entire investment side on the MSME. So we have Mr. Randar, Sanjay Kumar Randar, who is the ex-MD of GVFL. GVFL is the full form is Gujarat Venture Fund Limited. It's a first state government fund in India actually. So he was heading that fund. Before that, he was with RCL, Reliance Capital Private Equity Fund, SS Venture, which is a SoftBank investment fund. He was with SBI also. So Mr. Sanjay is having very vast experience of this industry. He has seen industry from inside out actually. And currently, he the investment committee member of the SRI fund, which is a government fund, which I discussed in my PPT. So he is also looking at from the top that how this MSME sector is helping by the government of India, and they have the complete roadmap, complete plan for the investment in the daughter fund. So Sanjay ji, I would like to invite you for your deliberation. We would like to understand from you that how do you see this the opportunity for investment in MSME sector, and the MSMEs basically what I feel that the startups are also MSMEs actually. So, and what is your experience in the past where you invested? So what kind of challenges are facing by the MSME when they are coming for the investment? And the SRI fund, how it is working and how it can help to the MSME sector. Over to you, and thank you very
much. Thank you, Ashishji. Thanks for the introduction. And I think you have set the tone for this discussion very well in your presentation. As you rightly said, MSMEs are the backbone of Indian economy, and not only Indian economy, across the globe. If you see, even in China or in US, MSMEs contribute a very significant portion to the GDP. And not only they contribute to the GDP, they also support, the best part is that they support employment opportunities. So most of the employment comes from MSME, and if that is very important for any country and any economy. In US also, 2/3 of the non-government jobs come from small and medium businesses. Similarly, in China, other than the government sector, if you see 80% of the jobs are coming from SME. And the same situation is in India. And therefore, I think the government has very rightly focused on MSME sector, and they are giving a lot of support, not only through equity, but other things as well, under the Atmanirbhar Bharat and Make in India schemes and other stuff. Traditionally, what we have seen is, MSMEs, because of the earlier definition of MSME being not in line with the current scenario, it never allowed MSMEs to grow, because on one end you had the incentives which were available as MSME, and the other end, the moment you grow yourself beyond the MSME barrier, all those incentives go away. So I think a very, very landmark thing happened in around June 2020, when this definition changed. And that sent a very right signal for MSMEs that now the world is open for you. You can grow to the extent you want to grow and become national and international champions in that sense. You don't have to remain stunted in your growth to avail all the benefits and incentives of MSME. So that is the message. It is not only a change in the number for definition. The message is that you grow as much as you want to grow and go to the next level. And this is getting supported. And if you have to grow, we all understand, you have to grow, you need money. And where does the money come from? I mean, it comes from equity and debt. And debt will not come without equity. And therefore, the government created this SRI fund, Self-Reliant India Fund, very aptly called Self-Reliant India Fund, which, as you pointed out, this is a 10,000 crore fund given by Government of India. And through this, 50,000 crore of equity will go to MSMEs. And if you leverage 50,000 crores of equity, even 3:1, then 1,50,000 crore of debt can be raised on top of it. That is the kind of capital that can flow to MSMEs through this fund. So this is going to be a game changer in the MSME scenarios. And another aspect that I would like to bring in at this point in time, if I have seen MSMEs way back in, when I started my career in mid-80s, at that point in time, it was, I have to just do this business and I'll pass on this business to my next generation. This is what. There were no aspirations to grow larger. Now, I think one very important thing and has happened is because of the startup revolution which has taken place in the country, and we have become the third largest startup nation in the world. that now aspirations of MSMEs have also been ignited with that. There is a rub-off effect, and there is a lot of overlap between startups and MSMEs. And therefore, now the newer generation of MSMEs, they want to adopt technology. They want to get, globally competitive in that sense, and therefore willing to take external funding and capital. And this is what is coming from all these measures which have been taken. Obviously, private equity funding and is available in India. I think there are more than 100 funds which are very active in the market, actively investing. There are much more number which are registered with SEBI, but I would say at least 100, over 100 funds are very actively investing in Indian market for MSMEs. And that capital is available for any differentiated business which is there. The only, if you want to raise capital from these venture capitalists or private equity funds, you have to be prepared for more organized corporate governance structures and a willingness to grow and bring in efficiencies, better customer experiences through use of technology, which is now happening in most of the SMEs. I see these days, I'm quite surprised and I'm very happy also to see the kind of business models MSMEs are throwing up, right from agri sector, whether it is about A2 milk or it is about supply chain of agricultural produce, right from farm to fork, or in, clean tech, you see newer businesses coming into charging stations, EVs, and also some of the very, very deep tech, companies which are coming. I came across a couple of companies, I'm sure you know, that they are making rocket launching vehicles for nano satellites. These are the kind of SMEs which are coming up in Indian market. So this is the depth of our market. Given the right support, I'm sure they will grow very well, and the future is with them. Later on, maybe I can speak a little more about SRI fund.
Right, sir. So thank you very much. I think you have very well covered in your speech the prospects of MSMEs in the country. I think everybody is aspiring, and the next generation is now not want to sit on the old tradition or old way of working. They're looking, they're deploying technology in the business, and they want to grow fast also. And this will help if the money will come from the funds, they can go fast and they can grow fast also. Thank you very much, Sanjay ji, for your opening remarks. Now we have, friends, we have Sridhar Sampath ji. Sridhar ji is basically representing South Asia of fund called Water Equity. As it names shows, water equity, water is, I think, the most precious, I think, commodity for anybody. And so he is representing a regional director, South Asia, Water Equity. And Sridhar ji, first of all, thank you very much for joining with us. And he had very, very good experience of working in various impact investment funds and the other organization for more than 30 years. He worked with the banks or Indian banks also. So he was with IFU, CSR Capital, Bestseller Foundation, and many other organizations actually. And he had seen that the journey of impact investment from very close point of view. So Sridhar ji, we would like to understand, because your fund is having very specific mandate and this related water and sanitation. So we would like to listen from you that what is this water equity actually, and how it can help with our MSME sector or the infrastructure sector in the country. And what do you look for whenever you are investing in any company or any organization? So over to you, and thank you very much.
Thank you, Ashish ji. Thank you so much for inviting me to this forum, and it's indeed my pleasure and privilege to be here talking to you all. Yeah, so water equity, as the name suggests, we are a water and sanitation focused impact investment fund manager. We are a fund manager, so basically we raise funds and deploy them, very much like a venture capital fund or a PE fund, except that we are an impact fund. So we, our mission basically is to enable access to safe water and safely manage sanitation for people in low-income households, people at the bottom of the pyramid. How do we go about fulfilling our mission? That's basically through two channels. So far, we've been focusing on the financial institution channel, mainly, and a little bit at the SME segment. So in the financial institution segment, what we do is we provide capital. We have been providing capital to financial institutions such as microfinance or housing finance or NBFCs, small finance banks, etc. We provide them capital, so that they can provide small ticket retail loans to people who need access to water and sanitation, like loans for building a toilet or renovating a toilet or a piped water connection or buying a hand pump, etc. in rural areas. So multiple users, but all within water and sanitation. So this is one channel, which is the financial institution channel. That's not of so much of interest to our audience here. So what is of interest basically is the other channel, which is the MSME, which is the enterprise channel, which is basically directly investing into enterprises in water and sanitation, like enterprises that are providing solutions to problems in the space of water and sanitation. And we have done a little bit of investments, debt investments into, for example, a company that's setting up a rural pipe water supply system. Both construction, operation and maintenance of a rural pipe water supply system in a very remote area, which is where people are getting pipe water connection for the first time. We funded another company into bio toilets and fecal sludge management. Again, these are solutions that are meeting a need, because sewerage network, which we find in big cities like Bangalore, Chennai, Mumbai, Kolkata, we live in houses and our toilets are connected to a sewerage network. But in most parts of India, that's not the reality. So there are other solutions that address this sanitation need. And we have financed a company that is providing solutions to this area, in this space, etc. I can give you more examples. But the important point is right now we are engaged in setting up a new fund, which is the infrastructure fund. It's early days. We are still maybe 9 to 12 months away from actually starting to make investments out of this fund. But this will be an equity fund which will invest into infrastructure projects in water and sanitation. Just to give some examples, we could invest in a company that's providing, that's setting up a large sewage treatment plant, like let's say Namami Gange project. $100 million project to treat a huge amount of sewage in Meerut city. I'm just giving an example. So we could fund that project. We could fund a large municipality. We could fund a PPP projects, that is in the public-private partnership model, which is going to build and operate a, let's say, a piped water connection system for, let's say, the Thane municipality. I'm just, again, an example. Don't take these names seriously. Then we could look at desalination projects, wastewater reuse projects. I can tell you that wastewater reuse is really a massive area. There are government regulations now requiring, apartment complexes and commercial complexes of a certain size and above to have their own treatment plants. You can't just let out your wastewater into the sewage system. You have to actually treat it before letting it out. So this presents a huge opportunity for MSMEs to enter this sector and provide a solution. So I can give many such examples. So we are looking to invest in the equity of such projects. Now, when I say projects, what we have to remember is we are looking at supporting with equity businesses that offer a solution. And this could be either in the form of SPV, special purpose vehicles that provide these solutions, like let's say an SPV set up for treating wastewater in a particular project. For example, setting up a Meerut wastewater treatment project could be SPV. Or we could support companies businesses on the balance sheet. For example, a company that is coming up with a pipe water connection system, they're going to set up and operate these systems through SPVs, but then they, we could support them at the balance sheet level at the parent company. That's the other opportunity. Now, this is a massive opportunity. You would know that in 2014, the Modi government started with the Swachh Bharat Abhiyan initiative, which was a game changer, because what happened was the necessity of sanitation and cleanliness and building a toilet became known to every single household, and not to least measure supported by movies such as Toilet Ek Prem Katha. It was a massive success, not just in India, but in other countries as well. Now, Swachh Bharat Mission has gone to the second stage, SBM2, where it's not just building toilets, but building access to sanitation. Now, another area the government has taken massive steps and investing huge amounts of money is the Zhanjivan Mission. The government's Har Ghar Nal Jal, I think, I'm sorry if I'm not quoting it correctly, but it goes something like this. Piped water access to every household in the country. So this again provides a huge opportunity for investments, because these projects need massive 50,000 crore, 1 lakh crore investments. Now, the government cannot be investing in all of these. And this is where the opportunity of MSMEs is. India has a large number of companies providing these solutions. India has a large number of SMEs, which are EPC contractors providing these solutions as well. There are other types of companies. There are technology companies as well. For example, there is this company in Hyderabad that is providing technology solutions for sewage treatment and fecal sludge treatment. When I say technology, not IT, these are physical technology solutions. And so I can tell you, across the gamut, there are many types of businesses providing solutions in water and sanitation. And we are here to support such businesses through equity, through our new fund. So this is broadly what we plan to do. Now, MSMEs which are in this area, of course, it has to be a solution in these areas or multiple solutions in these areas. We are looking, of course, when we do balance sheet investments, we are looking for something that every VC fund will look for. What are the founders' experience and what is the business model? How can they scale up? How are they able to, utilize the opportunities that are provided in the market? And what is the revenue model and what are the risks? So we will look at the business model. We look at the integrity of the promoters. We look at the scaling up opportunity, etc. So these are the stuff that we look at before taking a call on the investments. But I want to once again warn that we are still far away from making investments, but we're looking to build a pipeline in the meanwhile. So I will stop there. Spoken a lot. I'll be happy to answer questions at the end if any.
Great, sir. Great. I think you have given very good perspective of the investment which you would like to do. So many MSMEs, because in India, there is a revolution on the sanitation and water. So there are many MSMEs or many companies which are coming into this business. They will look at to raise fund from your fund. I think one question which is very, very pertinent, I think, in this connection, as you told that you are an impact fund actually. So if he's, I would like to understand what is the difference between the impact fund and the other funds, actually general funds, basically.
Yeah, sure, Ashish ji. I'm sorry you asked that question right at the beginning.
Yeah,
it's a good question. So see, impact funds like us have a double bottom line approach. We need a financial return and we also need a social return. Now on the, so what happens is where the social returns are very good. What do you mean by social return? Like how many people are impacted with access to water and sanitation through our investment? So that's a very important measurement. Secondly, there are multiple measures. I will not go detailed, in detail into all those measures, but suffice to say that what are the aspects? One is quality of impact. Is our intervention going to create a lasting impact or is it a very temporary impact? Okay, that is one. Like somebody is getting a concrete toilet, which is going to last for 20 years. This is a very lasting impact. They're going to get access to clean water for, let's say, next 20 years. It's a fantastic impact. Okay. Now, thirdly, who are the clients? Who are the people who are getting impacted? What is their income level? Are these people at the bottom of the pyramid or are these luxury apartment owners, who are buying 5 crore apartments? Is it going to help them? So obviously our fund is looking to help support projects that are going to help people at the bottom of the pyramid. Okay, need not be fully, but at least there must be a strong component of social impact. We're not saying that we'll only fund projects that have only people at the bottom of the pyramid. what we are saying is we would prefer to fund projects that have a strong element of bottom of the pyramid aspect into the project. Then acceleration, how quickly can we accelerate the impact? Is it going to scale up quickly, or is it going to be a slow scale up? How many people are going to be impacted? So these are all some of the aspects we look at. But to answer your question, yeah, it is double bottom line, returns and economic returns and social returns. And certainly on the financial return, we probably will be looking at a lower return than a VC will look for. Of course, VC takes big risks. We also take risks. But in terms of return, we will balance it out with a social return as well. If the social return is very good, maybe we'll kind of compromise on the financial return in order to achieve the social return. But we do need a financial return as well. So this is a big difference. I just want to add one more point. ESG, is another important aspect. Wherever we invest, we would like to see the environment, social, and governance aspects to be also taken care. Meaning, for example, no child labor and paying fair wages, employing women, gender equality. So there are a bunch of criteria we look at. And the last part I want to mention in this water fund is also going to be a water and climate fund. It's a water and sanitation and climate fund. So all the water and sanitation projects need to have a positive climate aspect. For example, a pure fossil fuel energy based desalination plant probably is less attractive to us. It needs to have a climate impact as well, climate mitigation, climate adaptation aspect. So these are the points that I want to add in response to your question. Thank you.
Thank you, sir. Thank you very much, sir. Thank you. Thank you for your nice deliberation. You very well covered the difference between impact fund and the other fund. Thank you. So now, friends, we have Rajiv Suriji. Rajiv ji is the managing partner of the Horizon Venture, which is a private equity venture capital fund. And Rajiv ji is having very wide experience on the corporate side with the large corporate like Colgate and all. And then now he's part of this fund where he's the managing partner. And he leads the consumer technology investments, so related to the consumer and investor relations. So Rajiv ji, first of all, thank you very much for joining with us. Rajiv ji, because you are a commercial or VC fund or a private equity fund. So from our MSME point of view, suppose any MSME looking to raise fund from the VC or private equity fund. So what are the challenges are facing by the funds when they are evaluating any typical MSME in India, and how you overcome the challenges in terms of whenever you are evaluating these proposals or these funds, and what are the key criteria generally you look for whenever you are funding to these MSMEs, and how you do value these MSMEs, because many times we have seen this question or this, I think, observation from the MSMEs that they are saying that the valuations are the startups are getting very high valuation. We are not getting that much valuation. So this is another aspect which our people would like to understand. And that the last which I would like to understand from you, the return expectation. So as Sampath ji has told, if the social capital is higher, then they can go for the lower the financial returns. But as normal VC or the private equity fund, how do you see that the kind of returns would be there, and how you would like to exit from the investment also? Generally, what is the time horizon for the investment? So a lot of questions are there for you, but I hope that you are a very senior person, so you will cover up all these things very well. Thank you, sir.
Thank you, Ashish ji. So the questions that you've asked me, it looks like agle 2-3 din tak baithna padega. So, but I'll try and condense that into the next couple of minutes or so. Yeah. So let me just first start off with an introduction to what we do and how it works. So it gives you a sense of, and then I'll get to the questions that you've asked anyway. So I'm Horizon. I represent Horizon. I'm a partner there, and we are an early stage VC fund. We have funded about 100 companies in the last maybe 5 or 6 years. We have about 2,000 crores of capital that we have available across the 4 funds for us to put into these companies. So we have quite a few successful companies actually in our fund. So some of the names that you might have heard of, these are the so-called unicorns. So we were early investors into Ola. We were early investors into Pharmacy. You might have heard of Go Mechanic. You might have heard of Country Delight. Dhruva, which is a cybersecurity company which is going to list on the NASDAQ. Zupi, MobiQuick, Nazara, Cardeco. These are all the kind of companies that we have been early stage investors in. So typically what we do is we start at a very early stage. We give them about 15-20 crores of equity for a 15% to 20%, or 15 to 20 crores for 15 to 20% equity share. But more importantly, we also add a lot of value by being startup advisors, helpers, introducers. We actually accelerate their growth journey. So we take them on and do this, right? The reason we are able to do this is because we ourselves are practitioners, right? So if you look at my own background, I have been a VC for 4 years and an angel for another 5 years, but I've also been a startup founder myself. So I've done a startup and sold it. I've also built large businesses across big brands. I was the chief marketing officer of Geo, launching what turned out to be the world's largest data network. I have been with Infosys for almost 7-8 years in the UK, building out that Infosys global business. And then, as you said, I started my career with Colgate-Palmolive, building rural distribution. So that's a little bit of a background. So what we do is bring this experience to try and create more traction for these companies and make them grow. So that's one more value add that we typically tend to bring in. So now I think, the big question that I have here, and this is the reason I'm so excited about being here, is basically that I see the next 10 years as being the golden age for India. So we have an amazing period coming up, right? And I know, let me just enumerate the reasons why I think that is happening, right? I'm sure this is true for all the people that are in this room under your chaperoning, Ashishji. So let me just talk about this. First of all, India produced 46 unicorns last year. So, we have all heard of unicorns. Unicorn is basically a $7 billion company, 7,000 crore kind of a company. So 46 unicorns were produced last year. That itself is a huge number. It's a humongous number. More than half of all the unicorns that India has created is produced in 2021 alone. That's an interesting statistic by itself. The more interesting statistic about that is India's unicorn growth was bigger than America, bigger than China, bigger than any other country in the world. Right? That I think is even more powerful as a message, because it now says that हम अपने आप को थोड़ा emerging country समझते थे, developing nation समझते थे, और ये digital technology की ज़माने में और दुनिया में तो हमने तो बड़े बड़ों को पीछे छोड़ दिया. And I think that's a very, very powerful message that's coming out there, right? And that's a record of sorts. So why has this happened? What is this 46 story, and what is the big story behind this? I think there are 4 or 5 things that have been responsible for this, and it all has to do with India going more digital than the rest of the world has gone digital, right? And I think there are 4 stories to that. One is really today, India's data rates are the cheapest in the world. We pay, I think, 5 to 6 rupees per GB in the country. If you think about, and part of it was, Reliance Jio launching Mukesh Bhai ne jo kiya tha, jinke, netritva mein hum kaam kar rahe the. So, but part of it is that. But nevertheless, that has meant that data is now available to pretty much everybody in the country. It's not a middle class privilege. It is not an upper middle class privilege. It's there across the country. It's there in every household. It's there with everybody. That I think is a very powerful message, because it means that you have access to a whole group of people that were earlier not being accessed. So you now have a much larger market that you can target through digital. That's one. The second thing is the emergence of payment systems like UPI and Aadhaar. Again, I've had the privilege of working with Nandan, who was my mentor earlier, and Aadhaar first, and then UPI, which was also, both of them were sort of under that. And now you have a digital payment mechanism. Essentially, your mobile phone has now become your private bank, right? आप अपने बैंक अपने पॉकेट में लेके घूमते हो, वो बहुत बड़ी चीज होती है, right? Essentially, आप जिसको भी पैसा दे सकते हो, लेके आ सकते हो, and there is no transaction fee also. It's literally free for you to transact this money. So that's a second big powerful thing that's there. The third thing that happened was this Jan-Dhan ecosystem. So over the last 5 or 6 years, something like 30-40 crore new accounts have been created. So a lot of people that were not in the digital domain, did not have bank accounts, could not transact in the digital world, suddenly joined this ecosystem, because of which I think the world changed dramatically for them. So again, all of these point to a much larger market that you have. And the last one, of course, is the GST regime, which has unified India. Earlier, India used to be 30 different states. Har state mein apni income tax, GST regime hua karti thi. And so these used to operate like 30 different countries. It's like going and servicing, I don't know, Pakistan on one side, or maybe, Sri Lanka on the other side, and Bangladesh on the third side. All of a sudden, India is now one country. You can sit in a UP, you can sit in an MP, you can sit in a Bihar and service the entire country from that. That I think is the fourth thing that has happened. All of these have led to a mushrooming of economic activity in the country and in the technology space, which I think is a very powerful thing. Now, add to it the last 2 years of COVID. COVID has just dramatically changed everybody's mindset, because a lot of people that were earlier physical did not go digital, had to forcibly go digital because they were sitting at home and they couldn't do anything. जो लोग बैंक पहले जाया करते थे उनको अपनी ऐप से करनी पड़ती थी, जो लोग मूवी देखने थिएटर जाया करते थे वो आजकल वो ऐप पे बैठ के देखते हैं, जो लोग बेसिकली दुकान में जाके सब्जी तरकारी खरीदा करते थे आजकल वो सारे के सारे ऑनलाइन ऐप पे करते हैं. Because of which I think the country has dramatically gone digital. So consumer has gone digital, services have gone digital, so everything is going digital, and that I think is the biggest opportunity that we face. That is the reason why I think India is such a powerful story in the next 10 years. It's sort of where we always wonder about our neighbor who we don't like to talk about too much, which is China. But I think the next 10 years equalization ka zamana aa raha hai, and I'm very, very positive about what happens, right? So that I think is a big opportunity that's staring at us, and that's also the reason why you're seeing so much of the startup valuations also rise, because everybody is seeing that future and saying, यार ये आज 100 करोड़ की कंपनी है, ये अगले 2 साल में 1000 करोड़ की कंपनी हो जाएगी. तो 1000 की कंपनी के हिसाब से वैल्यूएशन आज कम है, राइट? तो मैं ज्यादा खरीद सकता हूं, आज खरीद के बैठ सकता हूं, क्योंकि अगर ये 1000 करोड़ की बन जाएगी तो आई एम ऑब्वियसली मोर एक्साइटेड अबाउट दैट. सो आई थिंक दैट्स वन अपॉर्चुनिटी दैट यू आर सेइंग. सो नाउ लेट्स टॉक अबाउट द 4 questions that you asked me at the beginning. You asked me about so how do MSMEs or small guys approach these funds? The good part about this is we all our funds now have a clear funnel process. So essentially you write an email with your pitch deck to anybody's email ID. I'll put my email ID up here. I'm rajiv@oraisvp.com. आशीष जी आप publicly ये declare करिए, जो भी जिनके पास भी जो startup entrepreneur है आप हमें लिखिए, right, with your pitch deck. The only request is the founder should write. We want the founder to write to us because we want to interact with you directly. उसके बाद हमारी टीम आपके साथ एक ड्यू डिलिजेंस करेगी, उसके बाद 2-3 वार्तालाप होगी, 1-2 इंटरव्यू होगा, उसके बेसिस पे सिलेक्शन किया जाएगा, उसके बाद फंडिंग होगी. That's as simple as that. So that's one thing, how do you approach, right? What are the criteria we look for? Basically, we look for 3 things. We look for high growth opportunities. आपने खुद बताया कि venture capital seeks and searches for high growth opportunities. You have to have a high growth business model. That means I'm looking at large industry businesses. So if I look at a Pharmacy is in the pharmaceutical delivery business. That's a $70 billion business in India. Every company that we generally tend to fund that become big are in large industries. So that's the second thing that we look for. The third thing we look for is a very good team. So typically we need a technology founder that needs to have a very strong story. We need to have a business person that understands the domain expertise. And these 2 guys should be supported by an able team that can actually put this together. So we need to see all the founders together. So that's something that we tend to look for. That's the third thing that we want. And the last thing is some kind of traction, right? Come to us once you have some kind of a storyline in play, once you've got a business model going. It doesn't matter that you're making profits or not, but what matters is you're able to show growth, you're able to tell us a story, you're able to show कि ये company 10 crore से 500 करोड़ तक अगले 3 साल में कैसे पहुंचेगी. वो कहानी अब थोड़ा अगर कर सकते हैं और बयां कर सकते हैं हमारे लिए और क्लैरिटी के साथ बता सकते हैं तो ऑब्वियसली हम फिदा हो जाएंगे आपके. So that I think is the broad thing that you need to think about, right? So the last point you asked me was why are startup valuations relatively higher as compared to traditional companies? The answer to that is very simple. The answer is a startup company has got a much higher growth potential, right? I'll give you a good example in this own world that I was in. I left Colgate-Palmolive to join Infosys, right, in 2000. Right? So I'm a little dated, so my gray hair is showing here, right? But when I joined Infosys, Colgate-Palmolive was doing 1,000 crores of revenue. Infosys was also doing 1,000 crores of revenue. उस वक्त, right? 2000 की बात कर रहा हूँ, right? In 2008, I left Infosys, right? At that point in time, Infosys was doing 50,000 crores of revenue, right? Do you know what Colgate-Palmolive was doing? It was doing 2,000 crores of revenue. So the difference is very stark, right? And Infosys went from 1,000 crores to 50,000 crores in 8 years. Colgate-Palmolive went from 1,000 crores to 2,000 crores in 8 years. And that I think is a delta difference that makes a startup get the better valuation, because obviously 50,000 crore ki company is going to be a better company for you to invest in. That's the main reason that these things tend to grow faster. That is the other thing that you need to think about. Every company does not need venture capital funding. That I think is something that I want to make very clear. I think Sanjay spoke about this briefly, but every company, you need some capital. You need to work through that capital. There are lots of models here. Venture capital is not the only model for you to work on. So I would say, depending upon what your passion of the industry is and how much of a growth you have, try and choose the source of funding that makes the most sense to you. Debt might work better for you, or, private equity might work well for you, venture capital might work well for you, or even just plain, friends and family equity might also work for you. So depending upon what you're looking for, please try and choose the capital allocation that works, and usi wajah se aapki badhautri hogi. Best of luck, and I'm looking forward to the next 10 years of a great decade. Thank you so much.
Thank you, Rajiv ji. Thank you very much for your nice deliberation. I think you have very well covered also, and you have given all the answers within short span of time. Actually, there's a beauty of, I think, the professionals who are having the vast experience that you have covered all aspects of the questions also. So I think the one I think outcome is that the company which are having high growth potential, the investors are more keen to invest in these companies, and they can fetch the higher valuation also. So that's the tagline of this your entire deliberation. So thank you very much, sir. Now we have Samir Mahajanji. Samir ji is the director of a company called Stride Ventures. So it's a venture debt fund which is helping the companies, the startup space and the MSME space, the debt form. But they are it's a new age kind of venture where they are looking differently whenever they are giving loans or they are taking exposure. Samirji is having very vast experience of corporate banking, venture lending, treasury solutions, trade finance, and other areas, technology also. And Samirji, thank you very much for joining with us in this today's webinar. And Samirji, we would like to understand from you basically what is this venture debt actually, because many people are, this is a new baby in the entire ecosystem. Venture capital, I think everybody is aware now, venture debt is one of the new aspects. So, and how do you work basically whenever anybody would like to take debt, so why they should not go to the bank, why they should come to you? And how do you see the returns in terms of whenever you are lending money? And then there is a one saying that in the country that whenever you are going to any bank, first you create the collateral, then you should go for to the bank actually. So how it is different whenever you are taking exposure? And is there any equity is also involved in the entire this thing process whenever you are funding to the your company? So over to you, and thank you very much.
Sure. So thanks, Mr. Ashish ji, for your valuable inputs and setting the context. Thanks to all the panelists for the context on the SMEs and MSMEs leg, because that's a very critical leg. I'll quickly start with the introduction. I'll just introduce about Stride. I'll come on to Ashish ji, your questions at the end. I'll try to sum it in a very subtle way, though we have covered in length about the MSMEs and all. So Stride is a leading venture debt fund. We used to be a startup also a couple of years ago, and we started this as a fund one journey in 2019 with a $50 million. Eventually, we landed up into a fund two journey, which is a $250 million corpus. We have more than 55 portfolio companies in our portfolio. We have been a sector agnostic lender partner in this ecosystem. We always have been the same thought process which we have just discussed in this forum, that what's the new energy you're bringing into the ecosystem, what's the new innovation you've been bringing into the ecosystem. So what we realized while we used to do the bank lending, because coming from the lending experiences really helped us in accelerating the entire debt ecosystem in this startup world. I'll just quickly start with some numbers. Ideally, we have seen 36 billion, closer to that, flown in equity in last year, 2021. As Rajiv mentioned, it has been one of the best years for the entire startup ecosystem. For the first time ever, we have seen a lot of new age businesses, the established ones, going for the public. Names like Paytm, Nykaa, we've seen the different sort of an acceleration. For the first time ever, we've seen the kind of unicorns coming into this ecosystem in a much more holistic way. So out of this entire $36 billion equity fund, equity coming into India, the debt portion is really minuscule in India as of now. So venture debt plays a critical role in terms of bridging this gap and giving another source of a capital to really support your businesses, to support your working capital, to support your basically any operational expenditures for the businesses. And it can be supported by a cash flow based lending, as Ashish ji mentioned. So it need not to be a collateral based lending, which I'll cover onto that leg also. So just to give some numbers, so $36 billion, not even 5% of this entire flows is contributing by the debt flows. So we're sitting at a very low number vis-a-vis the developed economies like US, China. It is closer to 15% of the penetration from the debt perspective. So it's a opportune time for the venture debt to contribute in a very holistic way in this ecosystem. And when we talk about MSMEs, I'm sure the kind of a latest thing is all startups have been already qualified into SMEs, MSMEs categories. Banks have started qualifying them into PSL because of the regulators coming in that you have to qualify them into the PSL. So seen a different leg of an acceleration before coming into specifically venture debt. Personally believe to achieve a $5 trillion economy, we really need a right set of impetus to transition these startups into a larger and mature firms. So this goal is really contingent upon the right infra, enabling market linkages and credit accesses. So what trends we have seen in this while underwriting these companies, because we have been funding these companies, we have seen different trends altogether. We have seen a trend with the growth in the digital payments like UPIs, like Aadhaar enabled payments, wallets have seen a different acceleration. We have seen also a digital growth in the bookkeeping and accounting SaaS solutions. It could be to a Kirana tech store, it could be an agri-tech companies. So we've seen those sort of also enablement coming in. So emergence of online digital channels have really accelerated this piece. So venture debt, coming to your Ashishji question. So venture debt is purely enabling another source of capital to the venture capital backed companies in India. So there should be an institutional investor who should be backing all these companies. That's the maybe one of the primary requirements while underwriting these companies. The second leg is it's nowhere a collateral backed lending. It's a cash flow led lending. Though venture debt underwrite a company sees all sort of a criteria, which is in a way a very traditional one also, that the promoter quality, founder quality, team quality, you see the hygiene in the company. Venture debt also comes is a way that they enable the credit for the first time into the company. So companies which we underwrite have largely seen that they have never seen the credit, a formal credit in their own sort of history. So all these pieces put together to bridge a gap of a $1.1 trillion, which is a credit gap currently, which we understand. So startup in a piece, venture debt enables that gap. The another question which you asked on the warrants or equity, is there an equity involved in this? Yes, a bit of the portion comes in the form of structuring in the form of a warrant or an equity, which is a part of the debt structuring which we underwrite. So roughly 10 to 15% of the debt amount generally we take in the form of a warrant, which is an equity format. And the coupons and the pricing has been very traditionally, it's a very you would say far cheaper than the informal credit, which unfortunately or startups land up taking it. So that's another leg. Also, just to cover one more important aspect, we have been the sector agnostic fund. We have funded retail, agri, logistics. We've done B2B commerce businesses. So we have enabled all those pieces.
Great. I think very well covered. I think you have covered all the aspects of the venture debt actually. And the venture debt, you are helping the new age company or the MSME also, where the collateral is not the necessity or not the requirement actually. The beauty is that you are funding the company, even the first credit also you are giving to them. So many startups or many MSMEs are there. They are facing a lot of difficulty for first funding actually. Second funding and third funding is easy. So I think you can be the good source for these companies, and the venture debt is, I think, a game changer for the MSMEs or startups. And you told that this opportunity of more than $1 trillion. I think the gap is there actually. It's a huge gap actually, and it's a massive gap actually, which can be met out through these kind of innovative models and all. And you are also taking upside in the form of equity. So that's great. I think our people who are participating in this today's webinar, they must have got some kind of understanding that how the venture debts are funding. And so now I would like to come back to Sanjay ji. Sanjay ji, we were discussing that you have told that the next decade is for MSME, and it's a very bright future for the sector, and the government is supporting a lot also through SRI fund. So if you can give some more details that how the MSMEs can get benefited through the SRI fund actually, how this SRI fund is functioning in the country, and how they can approach the MSMEs to raise the equity from this fund actually.
Sure, Ashik. So, like I said, this was a path-breaking, initiative of the government. So the corpus of the fund is 10,000 crore. And this is a fund of funds, which means that this fund will in turn invest in various venture funds. We have, like, for example, Rajiv is there from Aureus. So, for example, if Aureus is going to raise money, we can be one of the LPs in that fund. And in turn, those kind of funds, the daughter funds, will necessarily, as a condition, this is what has come from the government, that they have to invest 5 times of that amount, what they take from this fund of fund into MSMEs, which means if we invest 100 crores in a fund, then 500 crores will go towards MSME funding. And that has a very cascading effect across the MSME segment. So, plus this fund will encourage more and more daughter funds, which are, when I say daughter fund means the funds in which this fund of fund invests. The funds like, it could be any AIF category 1 or category 2 AIF, which is there. Now, these daughter funds will stimulate equity investment into various MSMEs across the country. And one of the objectives of this fund, see, we have all spoken about startups, and while there is an overlap between startups and MSMEs, but this is a matter of fact that there are a lot of traditional MSMEs which are there in the country and who are doing a stellar job for our economy. They also need support, and they also need equity support to grow. And one of the objectives of SRI fund is to nudge and motivate daughter funds to invest in such traditional SMEs also. And when I say traditional SMEs, they can also be on a very high growth path. These days, a lot of traditional SMEs are adopting newer technologies like IoTs and other, industry 4.0 manufacturing, which is coming in place. All these factors are leading to high growth for traditional MSMEs also, which is one of the conditions for venture capital funds to invest in, because they want to invest in high growth ventures. So that way, it is stimulating, this SRI fund is stimulating the environment for investment, not only into, the startup kind of ventures, but also into the traditional and conventional MSMEs as well, where you are coming up with more differentiated business models. I'm sure most of the VC funds will be very happy to invest in these kind of companies. Typically, this is a 15-year fund, so we are giving sufficient time for daughter funds to make their investments, choose the right companies, and help them grow. And I think government came up with this fund with the belief that this will really stimulate the environment. There is already a fund of fund for startups, but this is another fund which has come up for targeted towards MSMEs. And this will stimulate that growth all across. If you have any specific questions about this SRI, I'm happy to answer.
Great, sir. Great. I think so. This will be, I think, again, a game changer for the traditional MSMEs. Actually, there was no tool in the country where the traditional MSMEs can go and can raise equity. For that, there was a ecosystem. Banks were there, MSME, NBFCs are there, financial institutions are there, but there was no fund as such who is funding to these traditional MSMEs, which the government has took the initiative. And as you told that this 10,000 crore will become 50,000 crore because the daughter fund has to invest 5 times of that. It will be a, I think, great opportunity for our MSME friends. I think they will take the advantage of it. And within next 4 or 5 years, I think there will be the new India in this traditional MSME sector also, because these are companies which are doing very well in their sector or in their business, but they are lacking of some kind of equity for their growth. Actually, if this can come, because they have put their entire money, whatever they have, but practically they need some outside support. This will help them, and they will grow faster and faster. They will adopt technology also. And hopefully our MSME will become global also, although some of them are already global, but more and more companies will become global with this help actually. So it's a great help from Government of India. and SRI fund is doing wonderful actually. So, sir, one more thing: if somebody want to approach for funding from the MSME point of view, so how they should approach to SRI fund, or they should approach to the daughter fund actually? How they will know that those are the daughter funds actually?
So MSME companies have to approach the daughter funds. This is a fund of fund which will invest in daughter funds. All the daughter funds which are funded by SRI fund are available on the website of NSIC Venture Fund Limited. So NSIC is the nodal agency which is through which this scheme has been launched by government. And so on their website, the daughter funds names are listed out. You can approach the daughter funds once you know the names. All the daughter funds have their website. They are well-known funds. They have their website. So MSMEs have to approach the daughter funds, not the SRI.
Okay, right, sir. Thank you. So, Sampathji, I think because you are having this international perspective, impact fund and all. So, suppose anybody would like to approach your fund for taking the help or in terms of funding, how they can apply? Is there any process, set process for that, or they can just write an email to you?
Ashish ji, is very simple. They can just write an email to me, and then we will respond. We will, with some description. If they have some, if they have a presentation on what to do, very simple. Or they can just write a simple email saying what's their business, what are they doing right now, and what is the kind of support they need in terms of funding. And then we will respond and we'll have a conversation with them. Or if it doesn't fit us, if it doesn't fit our criteria, we will say sorry. But if we believe there is a chance of doing something, then we will reach out. We will reply back and then take this forward. Very simple. So you can share my email address with, you have my email address. You can share it with whoever is interested. You can take that forward. Thank you,
sir. Thank you. Thank you. Rajiv ji, I think you told that you are looking for high growth companies, being a VC fund and all. So suppose any MSME company would like to approach you. Is there any scope for that, or you are just looking only the startups or the high growth company which are into startup space only?
So I think the point was made very clear that every startup is also an MSME. राइट सो वो हमें भूलना नहीं चाहिए क्योंकि एमएसएमई का डेफिनेशन तो जैसे आपने बताया पहले प्रेजेंटेशन में और जैसे संजय जी ने बताया इट्स वेरी क्लियरली डिफाइंड सो एवरी स्टार्टअप ट्रेडिशनली इज एन एमएसएमई राइट सो वंस यू स्टार्ट टू हैव कैरेक्टरिस्टिक्स दैट बिकम फास्ट ग्रोथ और हाई ग्रोथ व्हिच एवरी कंपनी वांट्स टू बी देन यू स्टार्ट टू बिकम बेसिकली अ स्टार्टअप राइट सो वो जर्नी तो फंजिबल तो होती है राइट सो टू माय माइंड आई थिंक वी आर ओपन टू एनीबॉडी रीचिंग आउट टू अस व्हाट वी विल डू इज वी विल इवैल्यूएट आई नोटिस दैट there is a link. That link will work right now, hopefully. And once you are putting your details in there, we are happy to sort of engage with you and try and create a storyline. So please let me know. Happy to sort of do this. I think the opportunities that exist are enormous. I think what Sanjay ji's SRI fund is doing, what SIDBI has through fund of funds, they also have a story there. NABARD is investing. So there's a lot of Sarkar money coming in, but there's a lot more of private money also that's coming in, right? So Sarkar money, every 10,000 crores that Sanjay ji puts in will become 100,000 crores because 10x will become, private investors that come in. And then on top of that, you've got another 3x that's coming from, the debt funds that are espoused by guys like Samir. So, basically you've got a huge pool of money that is available and kicking and wanting to be deployed across these ecosystems. So happy to do that. And I think, that's something that we can try and do.
Great. Thank you very much. Thank you. So Rabir ji, I think again the same question because a lot of traditional MSMEs are also part of this. I think attendees or the participants, so they would like to understand also that if they suppose they want to approach, so is there any headroom for or scope for them for the venture debt fund, or you are only supporting the new age companies only?
So, Ashish ji, first of all, as Rajiv also mentioned, so MSMEs by category being generally a biggest qualification for the startups, obviously. In venture debt, apart from that, we have our own in-house NBFC, which I forgot mentioning, and that's something where we underwrite different sort of structures. So we particularly doing supply chain financing. We've been doing embedded finance solutions, where buy now, pay later has been the buzzword these days. We would have seen a lot of e-commerce firms have been using those solutions. So we have come on with that solutions also, which itself, it's a 7 trillion kind of a market size. Revenue-based financing, we have been kind of particularly doing it for some of the SMEs and MSMEs pool. So to answer your question particularly, we tend to do everything around the new age businesses, which definitely gets one of our you would say foremost qualification for choosing a company. We are definitely looking for like-minded and high energetic founders who we can support, but and can curate different debt structures on our NBFC leg and plus from our AIF license. But yes, one institutional sort of tick mark we would request in all these new age businesses. That's the foremost thing. Yeah.
Okay. Thank you very much. I think Sameer ji, you have very well covered this thing. So it's everybody is welcome. Subject to that, it should fit in your parameters actually. So great. So friends, I think we have already crossed the time limit actually. So I would like to, I think, end the session here. I would like to summarize whatever we have discussed, whatever has been deliberated. And I hope so that all the participants who have participated in this discussion, they have made it more interactive also. They would be getting some kind of benefit in terms of the understanding about the VC funding and the MSME participants, those are from the traditional MSMEs. For them also, there is a big opportunity in the country. So our panelists have given very, very good feedback about all the questions, and they have covered very well from their organization point of view, from the country growth point of view, and the next decade is for MSMEs actually for India. So it's a golden time. I think everybody is looking at it very positively, from the government, from the funds, from the other stakeholders. Everybody is now participating in this growth. So I will request to all the participants take the advantage of the discussion which we had today. You can approach directly to all these funds where you find the value for you, and they will definitely help you in your funding requirement, whether it's a debt or equity for your growth. So thank you very much. Thank you all. I would like to thank you once again to all the panelists for sparing the valuable time. All of you are veteran in the industry, or you are busy in your businesses. But you could find time, and it shows your interest in the MSME sector and something for the country also. So thank you for joining with us. I would like to thank you all the attendees for joining with us and listening us patiently and making it more interactive. I would like to thank you to the Resurgent India team who had made it successfully, especially Mr. Rohan, Joginder, and my colleague, Mr. Ashish Deswal, who did very hard work to make it successful, bringing all of you at one place. And I think this discussion will help to everybody. And if you want to listen or you want to forward this, I think, video, we will send it to all the participants, or it can be downloaded from YouTube. So the more and more MSME companies can take the advantage of it, and it can be spread across the country, so that everybody should know that how the VC funds are looking to invest in the MSME sector. Thank you very much. Thank you once again to everybody, and wish you all very happy, healthy, and safe. Thank you. Thank you.
Thank you.
Thank you, Ashish.
Thank you, Ashish. Thanks, everyone.
Thanks.
Thank you. Thank you, everyone.